Welcome back to Wealth-ology. For today's video, we will be going to talk about how to prepare for the market crash 2.0. Let's get started. Michael Burry has been outspoken about the recent market collapse, comparing it to the crisis of 2008 and claiming it like watching a plane fall. He displayed how the market was trending downward and predicted that a huge speculative bubble would burst. Now, the majority of people did not believe him, and many referred to him as a broken clock that constantly made mistakes. However, many people are beginning to retract their statements in light of this year's market developments. It looks that Burry was accurate in his warning of a market catastrophe. The SP 500 is down 21%, the Nasdaq is down 24%, the Russell 2000s is down 25%, and all of these are in bear market territory if you look at the major stock market indexes. In this video, we examine Michael Burry's preparation for the current market environment, as well as the composition of his portfolio and the stocks he owns. What we discovered is really intriguing. His largest position is a short, and he is shorting one significant stake. Let's look at the 12 positions that Michael Burry now owns, since he owns 12 equities in total. Stock 1. Apple, 17.9%. This is now his largest position, and it's really fascinating. Burry owns a put option worth 17.9% of the portfolio with a market value of $35.97 million on the Apple stock. For those who don't know, a put option is a contract that pays out if the price of the stock declines. So, Burry is essentially wagering that the price of Apple stock will decline, exactly as he did in 2008 when they shortened the housing market, exactly as he did in 2008 when he shorted the housing market, the largest stock on the stock market. Apple is what he is shorting this time. Microsoft, valued at $1.9 trillion. Why would you bet against this behemoth of a company? But if this is the exact reason why Burry has chosen to short Apple, it's so big, which means it has a lot of potential room to fall, of course. As the old saying goes, the bigger they are, the harder they fall. Also, he's making the opposite bet to the one that Warren Buffett is making. Buffett's largest position at his investing firm is Apple. The stock was not the put option, so that was worth 42.8% of Buffett's portfolio, and it is by far the largest stock that he owns. So it's very interesting to see these two big investing players at opposite ends of a bet with their largest positions. Stock 2. Bristol Myers Squibb, 10.9%. His largest stock position that isn't a put is Bristol Myers Squibb. It comes in at number 2 in terms of the size of its portfolio, worth 10.9%, valued at $21.9 million. Therefore, Bristol Myers Squibb is an American pharmaceutical company that seeks to create medications to aid patients with diseases like cancer, AIDS, diabetes, arthritis, and etc. This obviously profits pharmaceutical companies. However, it's also possible that it's just the numbers behind the stock. Bristol Myers Squibb is trading at 76.50 per share, and it's one of those uncommon stocks that has performed well in 2022, since Burry purchased the stock in the fourth quarter of 2021 at an average price of $62.30. It appears as though he has already gained some money with this stock. Stock 3. Booking Holdings, 9.3%. This position is valued at $18.8 million, is worth 9.3% of his disclosed portfolio. Booking Holdings. You've probably heard of it. It's the online travel fair company. They own a bunch of these online travel brands like Booking.com, Agoda, Cheap Flights, Priceline.com, and a couple more. Burry made a wise move here, as travel agencies undoubtedly suffered during the epidemic when everything was shut down, and now that things are starting to open again, Burry's wager is that these businesses will begin conducting more business and turning a profit. Burry acquired shares in the first quarter of 2022 at an average cost of $2,348 per share. But at the moment, the stock is trading for $1,890, which means that we can purchase it at a price that is likely lower than what Burry paid. Stock 4. Discovery Inc., 9.3%. This is pretty much the same size as Burry Booking Holdings position. It's valued at $18.7 million again, worth 9.3% of the portfolio, and he owns 750,000 shares of stock. Therefore, Discovery is a media corporation that owns television networks, including Science, Animal Planet, TLC, and Discovery Channel. The intriguing thing about this stock right now is that it is no longer in existence. I looked everywhere on the internet for the stock before discovering that it merged with Warner Media on April 8, 2022. Burry engaged in a little amount of stock arbitrage and profited from the merger with Warner Media. The stock now trades under the ticker named WBD. Stock 5. Alphabet, 9.0%. Google, often known as Alphabet stock, is Burry's fifth largest holding with a market value of $18.1 million, accounting for 9% of the portfolio. Burry purchased this stock in the first quarter of 2022 at an average expected price of $2,781 per share. As is well known, the main IT companies have recently been struggling, and as a result, Google's share price has fallen significantly this year, currently trading at $2,230 per share. The fact that Burry shorted Apple shares while also owning Google stock struck us as particularly intriguing. They are both incredibly large corporations, but perhaps there is only a slight advantage to Apple because it is worth roughly $700 million more than Google. Perhaps this explains why he shorted Apple while buying Google. Additionally, it's possible that he likes Google's financial model, which relies on advertising rather than phone sales. Stock 6. Cigna Holding, 8.9%. Cigna, the healthcare and insurance company, is the sixth largest holding currently, so it's worth 8.9% of his portfolio. He has 75,000 shares of the company, valued at $18 million. Cigna stock, again, it's one of those rare ones that is actually not done bad in 2022. While most companies are declining this year, Cigna is up 9.3% year to date. Burry purchased Cigna in the first quarter of this year at an average price of $240 per share, and it is currently selling for $256, so he may have already made a small profit. Stock 7. Meta Platforms, 8.8%. You'll notice that a number of these positions are valued roughly a tenth of his overall portfolio, around the 10th percent mark. Burry's seventh largest position, previously known of course as Facebook, is worth 8.8% of the portfolio. Anyone who has been following Meta stock will be aware of its significant struggles this year. It has fallen from a price of $340 to $155 as of today, which is almost halfway down. Stock 8. Ovintiv, 8.1%. One of the biggest producers of natural gas liquids, natural gas, and oil condensate in North America is Burry, which has the 8th largest position with a holding worth $16.2 million. The stock represents 8.1% of the portfolio's value. I don't know whether you guys have been following this, but what industry will have the best performance in 2022? In terms of green healthcare, there are really just two sectors, although energy stocks have performed the best. In general, this year's performance of energy companies has been strong, and Ovintiv has followed suit. Ovintiv is up 31% year to date as a result of the explosion in oil and gas prices, which we have all most likely been following, and the increased demand and pricing have been profitable for energy firms. So it is clear that Burry has benefited greatly from this decision. Stock 9. Nexstar Media Group, 7.1%. You'll notice that Burry does own quite a few of these media and communication companies. For example, Google, Facebook, Nexstar, and Discovery are all in the communication sector, which is America's largest local television and media company. The next company, with a value of $14.4 million, represents 7.1% of the portfolio. It is one of the few equities that has not experienced a decline this year, and as of right now, it is actually up 4.2% year to date. Stock 10, 11, 12. Stellantis, Global Payments, and Sportsman's Warehouse. Okay, now that we've finished the last three holdings in Burry's portfolio, there are a few things we need to make clear regarding Michael Burry and his positions. Stellantis, a manufacturer of automobiles, in his 10th largest holding, it accounts for 4.8% of his portfolio. Is his 10th largest holding. It accounts for 4.8% of his $9.7 million portfolio. Consequently, Fiat Chrysler and the French PSA Group merged to form this firm. Global Payments' ticker symbol, GPN, is number 11. GPN accounts accounts for 4.5% of the portfolio's $9.1 million market value. His last holding in his portfolio is Sportsman's Warehouse, an American outdoor sporting goods store whose stock has dropped 43% over the previous year. It is currently only worth 1.3% and has a value of $2.6 million. Burry may simply be using this as a value play to take advantage of the low price. What have you discovered about our topic? Please let me know in the comments section below. And if you like this video, please give it a thumbs up, turn on the notification bell, and subscribe to our channel for more. Thank you for taking the time to watch. Stay tuned for our next video.